Hello everyone, today's topic is venture capital. The quick introduction of venture capital. Venture capital is a financing that investor provides to the new startup companies and small businesses. It helps to boost the new companies and tired enterprises who has lagged in their growth. And it also helps to grow business in the area of industrial financing in India. Venture capital is also inputs of skills to set up the new firm, marketing strategy and organizing and managing skills. Venture capital generally comes from well-off investors, investments like banks and any other financial institution. Moving to the head, we'll know the definition of venture capital. Venture capital is defined as a financing institution which is joined an entrepreneur has co-promoter in project, share the risk and reward of the enterprises. And venture capital is a private equity which is invested in the company and they believe to have long-term growth potential. Next is features of venture capital. Long-term investment. When venture capital firms invest, they intend to keep their company in their profiles for 4 to 7 years. Lack of liquidity. Limited venture capital fund liquidity and the record rate of startup launches may lead to the complicated scenario. High risk. Venture capital investment are high risk because the capital invested in usually unsecured. If the business fails, equity investment is lost. Private equity firm mostly buy 100% of ownership of the company in which they have invested. Wide scope. Venture capital is intellectually fulfilling, professionally challenging and can be economically rewarded. Equity participation refers to the ownership of share in a company or property. Now we'll see the advantages and disadvantages of venture capital. And the advantages is opportunity of expansion company. It's represent most glamorous and appealing. Valuable guidance and expertise. They bring wealth and expertise to the company. Helpful in building up network and connection. The business does not stand the obligation to repay the money. Venture capital are trustworthy and it's easy to locate. Now we'll go to the disadvantages. Delusion of controlship and owner. Has the investor become part owner, the autonomy and control of the founder is lost. Early redemption by venture capital. It is an uncertain form of financing. Venture capital take time to decide. It is a lengthy and complex process. Approaching a venture capital can be tedious. One of the way to approach a venture capital is through your mutual connection. Company requires to return higher amount than the actual amount of the investment. May realize the fund from time to time. Scope of venture capital. Seed finance. It is also called as a stage of development of an idea. In the initial stage, venture capital provides seed capital for translating idea into business proposition. At this stage, depth investigation is made generally for a year and more. Startup finance. It is also called as implementation stage when the firm is set up to manufacture product or provide services. Startup finance is provided. The first and second stage of capital used for full manufacturing scale and future business growth. Additional finance. It is also called as fielding stage. Here the firm has made some losses on entire the new setup of activity, so facing the problem. Thus the venture capital provide another equity fund to develop a new infrastructure of the company. Established finance. At this stage, the fund established in the market and expect to expand at the rate of growth. It's provide finance, expansion and diversification of the business to earn good return, stability and economic of scale. Methods of venture financing. Equity participating. Venture capital firms participate in equity through the direct purchase of share. This investment in share does not exceed 49%. These shares are retained by them till the assistant project makes the profit. Conventional loan. Here, venture capital provide loan at lower fixed rate of interest until unit become operational. Conditional loan. Here an interest free loan is provided during implementation provide but company has to pay loyalty on sales. Income note. It is a combination of conventional and conditional loan. Here the both interest loyalty is pay at lower rate of venture capital firm. Venture capitalization scenario in India. IDBI Venture Capital Fund, RCTC, IDICI 1998, Gujarat Venture Fund Limited, Canara Bank.